Shout out to First Gen Vibes bringing this up, and she is absolutely correct. Hey, you guys, my name's Annette. I'm a real estate agent, claims adjuster, and I also have 16 years experience in the mortgage industry, and I want to talk to y'all about this. I was on TikTok scrolling. I came across this post, home buyer regrets and things that you wish you knew. And she's saying go with a direct lender. This is 100% true. And what a lot of y'all want to do is y'all want to go with the bank in which y'all have y'all checking and savings with. Why? I don't know. Then y'all want to go with some national lender that you saw a commercial on TV for. Okay, so what you want to do is you want to go with a direct lender. And I'm going to tell you why, okay? You want to go with a direct lender because doing mortgage loans is all they do. That's what they are experts at. That is their primary focus, okay? So why would you go to where you have your checking and savings to get a mortgage? That's not what they do. Mortgages are second products to the bank that does your checking and savings. The main thing they do is checking and savings, and they make money off the money that you put in checking. That's what your local bank does. We do not want to go to them unless they have 1 to 2% interest rates, okay? You want to go with a direct lender because a direct lender has access to lines of credit, right? And the more lines of credit a direct lender has, the more products that they can offer you. And then they can also offer competitive interest rates. Most banks don't have separate lines of credit. They only have that one line of credit, which is the money that they have made off your checking and savings. So they don't have multiple products, multiple programs to offer you, okay? Also, if you go with your bank, most likely their underwriting guidelines are super strict, right? They are super strict, meaning they are going above what Fannie Mae, Freddie Mac, and FHA are doing. Why are they doing that? Because your bank is most likely going to keep your loan, meaning they are going to be your servicer. You're going to be making the payments to them. So that means that they're going to take on the risk of having you as a homeowner, as a mortgager. So what do they not want to do? They don't want to take on a lot of risk. And that's why they have all of these restrictions. That's why they go above and beyond with their underwriting, because they don't want to take a lot of risk. They don't want to risk lending you money and then you not paying them, and then they have to chase you for the money. If you go with a direct lender, they have these lines of credit, these warehouse lines. They have multiple investors that will accept different credit scores, different loan to values, okay? So you want to go with a direct lender because they have access to programs that banks do not have access to, all right? And the third reason why you want to go with a direct lender, and this is very important, going back to this is all they do. So when you deal with a direct lender, you're most likely dealing with a loan officer, right? And that is his business, right? So he is going to do whatever it takes to close that business. Your bank, where you have your checking and savings, they don't give two craps if your loan closes or when it closes. That direct lender, not the national ones, that little lender, your cousin that's a loan officer, that small company that you pass by on the way to work through the subdivision, they are going to most likely go harder for you than your bank is, because they don't have to cut through all the red tape to get your loan done. They're going to go hard. They're going to go fast. And that's what you want. You want a lender that's going to go hard, go fast, and have competitive interest rates that are available to you in loan programs. We do not want to go to the bank for checking and savings, you guys. And I'm telling you why speed is really important when getting a house, because sellers want buyers who can close fast. No seller in their right mind is waiting 60 to 90 days for your bank to finally decide that they're through investigating you and they want to give you a loan. Most sellers want quick closings. When they go through that contract and they're looking at number of days due diligence, okay? They're looking at how much closing costs you're asking them for, and they're looking at how long it's going to take you to close. You want to close fast. You want to close fast. You want to close fast. And you need a lender that's going to close fast, not your damn checking and savings. We're not fooling with those folks, y'all. Take this. This is a good one, y'all. take heed to this when you get ready to buy your house. It's okay to get a quote from your bank, your checking and savings. Get the quote. You know, we're shopping around. I encourage that wholeheartedly. I actually encourage you to do 3 lenders and get loan estimates from them. But man, go for the company that actually cares about closing.